Equity markets seeing a modest uptick. Recall that October was the month equities want to forget, most of them down somewhere between 8 and 10%. We saw a significant bounce in early November, but then we took a nosedive. And when trade tensions became sort of the talk in the headlines, we started to see equities follow suit, and we made new lows beyond that of October, the October settlement, and now we're back to flat, we'll call it. We're back to flat for the month of November, which is actually, I think, a win in this environment. And I think that right now with the uncertainties, with the technicalities of the market, likewise with all that's going on right now, we've got G20 going on, we've got a lot going on with the Fed, and we've got a lot going on overseas. To see risk assets sort of perform this well, or at least get off those lows, is a positive thing. So not necessarily bullish equities here, but I think getting back to flat was significant if we're going to build some kind of sustainable level to move forward on. And right now we're looking at 2685-ish as our level. 2700 is the big level you want to attain and get back above. That would certainly help you build some of those building blocks to get you back north. Recall it was every week seemed to be a new all-time high in equities in this run-up in 2017 and 2018, but has all since fallen apart since things kind of really just started to crater. And right now back getting building blocks one at a time. 2700 is the next level we need to get to and hold. And if you look at the VIX index, something that we've been talking about, 10 and lower, like the market had no fear at all. We've been trading above 20 now for about 6 straight sessions. We've had a price over 20, which is significant. And I think that the last 2 sessions are the first in over a week that we've seen a settlement below 20, but it isn't seeing a massive trade lower in volatility. Typically the VIX spikes up and it comes right back down, and then we kind of go, nothing really going on here. At this point right now, the VIX index holding at around 20 shows that there is concern in the market, that there isn't necessarily fear, but that they aren't looking at it and saying, oh, this will go away tomorrow. Credit issues, Fed issues, trade issues, things that have been around for a long time we've been talking about, but the volatility has not mirrored that image. And so right now we're starting to see that in the VIX index. And lastly, what do we have ahead? Well, this G20 meeting is going to continue to hog the headlines. As we saw today, trade tensions are bad, stocks go down. Trade tensions are less bad, stocks go back up. And that's really the pulse of the market. We do have Chairman Powell speaking tomorrow. We had Richard Clarida, the vice chair, speak today. He is optimistic on the economy and likewise will continue to support further rate hikes as warranted. I think we'll get sort of the same talk from Mr. Powell. However, I think his words will hold a little more, be under more of a magnifying glass to the markets. And the markets are looking for him to say that growth is good. They're looking for him to say that inflation's not that bad and that they will continue to see steady rate hikes. I don't know if he'll be able to articulate that going forward into 2019. I certainly think he'll tell you about this, the rate hike coming in December, which is pretty much a slam dunk. I know the market expectations have declined somewhat over the last several weeks, but certainly the market is priced for a rate hike in December. It's after December that things start to get a little cloudy. And lastly, we have the FOMC minutes from November. I don't expect a whole lot out of those, given the fact that we've seen such a shift in the market since then. Market was rallying into FOMC minutes, and we saw a big yay parade, and then things have kind of come apart. So I think that right now the FOMC minutes will be less looked at as typically we look at minutes. The market tends to build a little bit of volatility as to getting underneath the hood of what happened at the Fed meeting. I don't think it's a real surprise that they're going to raise rates in December, but it's 2019 that the market is very concerned about. I don't think those Fed minutes from November FOMC are going to tell the tale of that. So right now, equities in a positive upswing, but how long can it last? Mr. Powell may be the difference maker.